Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York. Markets have been closed for about a half hour, and the Dow Jones Industrial Average, U.S. equities markets as a whole, do close higher on the day. We've got the Dow Jones closing up about 125 points at 16,510. We've seen it trade as low as 391 and as high as 578, so closer to the highs than the lows. First chart that I do want to look at today is going to be a daily chart, this of the Dow Jones Industrial. And the one thing that stands out more than anything else, and we've been talking about this for about the last week to 2 weeks because it's been so prevalent, is the fact that when we look at these lows that we've had, we absolutely have these series of ascending lows, meaning we're getting higher lows as we move through this month and call it the last couple of weeks of August. However, at the same time, we do have this flat top. In other words, we've had this real ceiling in the market at around 16,600. We have had this market clip up one time really above that, but other than that, it's pretty much stayed within this range. And what that tells me is that as it approaches the apex, and we are certainly getting very, very close to the apex, which is right here, we should see some sort of dramatic release of energy, and therefore we'll see the market kind of jump one way or the other. We'll talk about which way we think it's going to jump in a second, but most importantly, we think that there will be some sort of release of energy. Now, one thing I can say, this is certainly not the type of correction that we have been witnessing, these shallow corrections throughout this dramatic rally. When we take a look, this chart here is a weekly chart. It goes back to about the end of 2012. And what we're looking at really is points in which we had these shallow corrections come into the market. These were very, very small dips, just a couple of percent, 3 to 4% declines. But the one thing that was prevalent on all of these, let's go ahead and highlight these here, but on all of these small little kind of release valves, was the fact that we had this hammer-like candle, meaning very, very long lower tail, small body at the top of the range. We had these hammers signaling the bottom of a market. And then the following week would be these long green lines, which represented really a takeoff from those lows and really a nice sizable move up. So when I saw this particular hammer, I said, well, we could be looking at something very, very similar. However, we certainly are not. We had the down week the next week, the up week. What we are getting is real consolidation in the market. And what I am looking at right now in terms of this most recent activity in here is very, very similar to what we saw here, in that we've got a congested market that's dramatically range bound and looking to see where it's going to move next. You can, you get this cluster of pricing that has that tight range. Now, that came just before, obviously, we broke, and we broke hard to the downside. The question is, are we building a base, or are we simply consolidating before moving to lower ground? That, of course, is a $64,000 question. My sense is that we'll probably see it break to the upside. Could be wrong there, but that's what my current sense is. Dollar extremely strong today, trading up about 1% on the day, almost at 96. And I'm going to pull up a daily chart. And on this daily chart, I've got a couple of different studies, but the one we want to really pay attention to in this particular case is the line study, our cascading lines. And so what we see when we put these up is as follows, that really, really sideways. The bias has been slightly to the downside, but almost neutral, and we are now at the upper end of this range. So we'll have to see if it breaks above this range. That could be signaling what we're looking for in the breakout. Next thing is when we look at the MACD. Again, this is a daily chart, but it does appear as though the short-term moving average is just crossing, it's just hit the longer-term moving average, so we could see some sort of a cross, but realize that we have seen what I tend to call these false positives on a number of occasions. Right in here, you get it, and you can see that the market attempts to cross right in there, only to fall back and actually widen in terms. That was right before we had that big correction. So we really want to see whether we get follow through and see this market kind of move up like this. But I can tell you this, we have seen the dollar trading off of the most recent highs, but now trading really roughly at mid-range of the entire range that we have seen, say, over the last couple of months. I think the dollar's headed higher. So traders, the last market that I do want to look at for today's show is crude oil. Now, crude oil, of course, has been under dramatic pressure, hits these lows well below $40 per ounce, and has recently been trying to form some sort of a base. We really see some real support now at this point at about $44 per barrel. You can see that on this daily chart. Throughout last week, after hitting these highs and coming back down, it has genuinely really been able to hold this particular support line. So we do have a flat bottom in terms of the lows that we have seen recently in crude oil, and to some degree we have this ascending top, a series of lower highs, although we almost have you can almost call it a flat top, so a defined range. I really need to see it break above. Right now it's trading, of course, at 46.31. I really need to see a break above to about 47.25, but at that point I actually would get bullish. And when we take a look at some of the other indicators, such as this weekly chart, our moving average convergence divergence, that has really begun to cross. Our stochastics right now are still in oversold territory, but they have certainly not hooked up yet. But we have seen this market really attempt to take off from this particular price point. Now, in terms of where I think this market could go, our basic forecast models right now say that if we do break above the 47.50 that we just talked about, we could see crude oil return back to about $60 per barrel. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.